Mark Henderson from Laramide Resources, Toronto-based uranium company. We're switching subjects here to uranium. I noticed that there was quite a lot of interest in the Q&A sessions and other things, including the recent Bank of America guest on the macro front about all things uranium, why it's a market happening. So with your indulgence, part of my precious 10 minutes here is going to be spent just dealing with a little bit of the macro, just so you set the stage. And then we'll talk a little bit of our company and what our plans are and how we fit into the developer group. We think we're prominently a prominent member of the developer group, which is a very small group. We set the company up. Basically, we were fortunate enough to get a property in the last uranium cycle with the provenance from Rio Tinto. So we have a very big, very interesting, low cost quartile asset. You know, world class is overused, but it's a very good asset. You know, we were fortunate to get that. And so we built the company effectively to be a supplier of choice to the Western utilities back in the last cycle. That whole philosophy has changed a little bit with the way the nuclear business has evolved. You've got a lot of nation state players in there now, and the contracting market tends to be less important now than it was, but it's still a very important market. The big new driver in nuclear, which I'm sure you're all aware of, and this is the thematic driver that really, you know, we lived through Fukushima. I'm going to get into a little bit of the history here in a minute. You know, this was an industry that was down and out, 10 years in the bear market. Mostly that was the result of a lot of psychological effects around Fukushima and really not positioning nuclear the way it should be in terms of energy delivery and its importance in energy delivery. And I think with the rise of the climate change issue, net zero, all the rest of it, we're suddenly in the sweet spot. And we're in the sweet spot partly because when you just had the climate conference in Glasgow and nuclear was prominently mentioned. You know, and this is a big, big driver, and the media now is picking up on it. Obviously, folks like Bloomberg, who are not, you know, they're not typically known to be fans of nuclear. They've kind of realized that nuclear is going to be a huge player going forward. They finally compiled all the information out of China, and China's doing a huge second wave of build now, which is going to be enormously important. Obviously, the other thing that's happening is public opinion, which is critical, obviously, to anything you're doing in society. Public opinion has dramatically improved in nuclear now in the last 10 years, particularly since Fukushima. You can really see the attitudes post-Fukushima. In terms of where we've been, this market's had a few big ups and some long periods of downs. So the ups were typically tied to huge reactor building cycles by big countries, starting with the US in the 70s. We only have 15 years here. The big move you had in the last cycle was all the rise of China. China came out in the early 2000s and said, we're going to build 60 gig by 2020. They've largely done that. The recent announcement says they're going to go to 200 gig by 2040, so put that in perspective. You can see we've had an awful lot of down period in between, partly because of what happened at Fukushima, which was a giant demand shock. The other thing that people don't really appreciate, though, is the last 10 years was a huge supply shock, and that supply shock was effectively Kazakhstan dramatically overproducing and not adjusting their production really to account for the fact that we'd had a massive demand shock. That started to get better in 2017. I think we're at the point now where everyone realizes the market is super tight. It took this catalyst, which is really related to Sprott, basically cleaning up the spot market, if you will, sequestering all these pounds in a way that has realized that we've basically taken the spot market from 30 to 50 bucks in 6 weeks. People in the industry like myself thought that was going to be 6 months. We always believed in the thesis, but we obviously thought that was a much longer thing that would have to happen. In terms of the concentration of supply, it's a very concentrated industry with very concentrated supply. You can see the countries that are important in nuclear in terms of where the production is. And you can also see that gap underneath that chart. You know, we've been in a place already where there's a supply deficit with announcements like China. I mean, that supply deficit is really gonna go crazy from here. But it's a very, very slow-moving industry. I mean, building a nuclear power plant, being involved in nuclear, it's basically the longest lead cycle business thing you could do in business. And things tend to happen very slowly, and then they happen all at once. So we have a company. It's basically in 2 jurisdictions. We like these jurisdictions, obviously rule of law jurisdictions, favorable jurisdictions, legally, et cetera. Australia and the United States. A little brief overview of the projects. I'll speak about the most important ones here in a second, but basically roughly balanced in terms of scale of resource. We have 50 million pounds in one big chunky ISR project in the United States and another, this world-class project we have in Australia called Westmoreland. That's also 50+ million pounds, and basically we know everything about it. We need to know technically. We basically need permits and then get on and build it. In terms of our project in the United States, this is what it looks like on the ground. It's what's called an in-situ recovery project. You're basically, much like this is where all the production in Kazakhstan comes from, you're basically mining water underground, bringing it to the surface, taking the uranium out. The land, when we're finished mining it, will look just like it does now, which is a big benefit when you're trying to permit things, obviously. So these ISR things tend to have less resistance from local populations and that sort of thing. This project was a legacy project from General Electric, if you can believe that. So a lot of the projects you see in our space are things that just haven't made it to be in production yet, but they're basically the known suite of assets that are available to go into production. And there's a lot of companies like ourselves that own assets similar to that. In terms of where we sit on the bottom part of that slide, where our project there sits in terms of its quality, size, and grade really is what matters in mining. We compare very, very favorable on both those fronts. In terms of where we sit from a valuation standpoint, we got a lot of catch up to do. You can see where we sit on that upper part of that slide in terms of this whole resource in the ground thing, which is kind of a way that a lot of these things are being measured. This is an industry that, frankly, right now doesn't have a lot of producers. I mean, you got a couple of big chunky producers, Cameco and Kazatomprom, and it gets very, very skinny after that. And you got a little production at a BHP byproduct, but there isn't much production. Just to give you a sense of scale of what's in the industry overall, the whole mine supply last year was maybe 130 million pounds in a market that needs 180 million pounds a year to run all the reactors. So it's a very, very small market. Our Westmoreland project in Australia, very big chunky project, very different project. It's open pit project, 2-to-1 strip ratio, very good grade. It will be in the lowest cost quartile. It's had 2 economic studies done on it. As I said, it came from Rio Tinto originally. We've done a lot of work on it ourselves. It's got 43101/JORC type resource on it. I invite you to go look at that at your leisure. It basically, we know everything we need to know technically about that project. We really need to get the permits and then get on and build it. There's some political opposition that comes and goes in Australia and the various states. Right now we have a premier in Queensland who ostensibly doesn't like nuclear, but that can change. And the government, they're not the permanent government of Queensland. So this is a project that is definitely going to get built in time. We also own, we're kind of unique because we have big development assets, but we also have, we think, one of the best greenfield assets, and it's basically an asset that was contiguous to Westmoreland. It's on that diagram there to the left. And so that whole land, that also came from Rio Tinto. That whole land package is basically 80K east-west by 30K north-south. It's a gigantic greenfield thing. Rio never really explored it. It was explored in the 70s. There's uranium there. We're just starting on that. It's very, very interesting from a greenfield standpoint, and obviously growing the resource base, et cetera. A little corporate snapshot. Obviously the stocks have done well. The whole sector's done well. Management insiders own a bunch of this. We haven't sold much. I mean, we think it's going a lot higher. In terms of where we sit, this is kind of who's who in the zoo in our little sector. There's an ETF that was created a few years ago, a very successful ETF. Started with $3 million. It recently went through $900 million of assets under management, so you can see how enthusiastic people are about uranium. This list is what I essentially call the survivor group, those of us that survived the 10-year bear market and are still here. And there's maybe 25 or 30 names. And the ETFs are a big factor now. Because I was in the last cycle, we had a company, this company was 700+ million market cap in the last cycle, basically on Westmoreland alone. We now own a bunch of other assets. As I said, we think there's a lot of room. You saw Fission earlier, they've got a 700 million market cap. One thing that's different this time, just from the market standpoint, I think the power of passive and the power of ETFs, which exist in our little sector, at quite a low level, quite a low threshold, at 50 million type entry level, compared to GDX or GDXJ or something where it's got to be a lot higher. Powerful driver for the sector. Just some of the value drivers for the coming year. I'll let you read that at your leisure. Just one last slide on the last one. Those of you who don't believe inflation is transitory, nuclear's got your back. You can see from that chart there that it performs very well in an inflationary environment. In fact, beats things like gold. So that's a wrap.